When will Tesla have a valuation of $1 trillion again?
Which would be about $320 per share. Tesla Economist Lee went from being very pessimistic about Tesla stock, saying that it could even drop below $20. And he said that $20 per share could still be high in a recession, although that was not his price target, but certainly he was quite uncomfortable. He did apologize since then, and here's where I actually respect Lee. He admitted that he is an emotional investor and that it was tough dropping over 15 million in a month. He specifically said that over 10 million of that is his dad, so I assume he has a few million in Tesla stock. And yes, he did confirm that he sold Tesla stock, so that was an official loss. And he sold on basically December 29th, I guess? Yeah, you could have almost not sold it any lower than that. I feel bad for him. I hope none of you actually did this. And he has been buying back in, although at a higher price. So let's dive into when Lee thinks Tesla will return back to $320-ish per share.
It's a big valuation, but it might actually be possible sooner than many believe. Lately, Tesla have been taking on PE ratios of 50 to 60. Some might say considerably high given the current economic climate of what some people are calling a recession, or referring it to still being in a bear market. Many others, though, are saying we've seen the recession already, and now we've entered a new bull market. Inflation may still be around, but we are seeing disinflation, so inevitably we will eventually see interest rate drops within time, and the market is forward-looking and pricing these in already, hence why we are now back to high P ratios for Tesla. Well, if Tesla can support a P ratio of 60, then all it takes is $16.6 billion in earnings to get back to a valuation of $1 trillion. Well, if we take Q4 earnings, we had $3.7 billion. If you annualize that, then we're at $14.8 billion. We're saying that we just need $16.6 billion at a P ratio of 60 to hit $1 trillion valuation again. That's not actually a very big difference.
If Tesla finds a way to reduce costs, which would offset the price cuts, then yes, I think that would be quite possible. And we do have some relatively strong evidence to point towards the direction of lowering costs, although would the cost really be that much lower? If we just look at commodities, for example, lithium indeed has been dropping quite a bit. But still, when I look at this chart and I look at, let's say, the middle of 2021, lithium prices are still 4 times higher compared to where they were just now, 1.5 years ago. And of course, while it is true that Tesla does beat Wall Street's consensus usually, the thing is, Tesla does not beat the consensus by a lot. It usually beats it by a little bit, although there was this one instance recently where Tesla really surprised everyone. Wall Street right now expects that there is going to be a huge hit to Tesla's profit margins due to price cuts. So if Tesla has something hidden, then perhaps that is likely to happen. While my long-term projections look really good, short-term, I would be more concerned about how is the economy going to do. For example, China's economic recovery is off to a slow start.
We currently have a relatively low trailing 12 months in earnings due to some issues we saw last year. The cash furnaces, the lockdowns in Shanghai, the downtime for upgrading Shanghai, the gap deliveries. Q2 earnings was down over 30% from Q1 last year, to give you some idea.
Very true, although short term, it is so hard to make any really reliable speculations because while it is completely true what Lee just said, going forward, we will also have multiple new factory announcements and we will have more money furnaces. And if at the same time we happen to have a horrible recession temporarily, I think there is a chance, and this is what Elon said himself too, that he would price the cars at perhaps even at break even, which would wipe out the earnings temporarily. Now then, the market could freak out. But yeah, having a factory shut down for an extended period of time, that was a big hit to earnings.
Sure, now we have price cuts that have perhaps reduced auto operating profits by as much as half. But we've also seen demand and production increase. Most Tesla bulls are expecting this Q1 to actually beat Q4 in earnings. And if deliveries are above 450,000 for the quarter, this is certainly a possibility. As we also have a few extras now too. The US government are giving Tesla subsidies on battery production, of course tax credits as well, meaning Tesla don't have to lower their actual prices as much to still generate enough demand. But potentially the most exciting side is the growth of the energy business. The Lathrop factory has a capacity of 40 gigawatt hour a year run rate, which is potentially revenue of a further $20 billion a year. Even at a 30% margin, then including subsidies, we could see earnings close to $20 billion. This alone could take earnings close to $20 billion.
The Lathrop factory is going to be a surprise eventually at some point. The question is, when will Wall Street be surprised? How fast will that factory be ramped? I think the best person right now to follow for that specific information that is actually up to date will be Bradford. He actually went to the factory, parked outside of it, I think, for a few days, and actually counted how many megapacks were coming out of that factory. Now, the number turned out to not be very high, but he is going to do that again soon. This time, Bradford is going there for a week to see what the current production is. And just to give you an idea of how much of a difference this makes, if Tesla produces 22 megapacks per day, let's say 365 days per year, just to keep numbers super simple, and let's say each megapack is 2 million, which is below their stated price on the website, but if you buy in bulk and if you bought earlier, maybe it's less. And we just want to keep the numbers super simple, so let's say 2 million. That would be like selling 321,000 vehicles at $50,000. So the megapacks are a big deal. Although here's what's interesting. On Tesla's website, I can't find the order button for the megapacks anymore. It was easy to find before. Now I'm browsing all over and all I see is just contact us. There's no order button anymore. Usually when companies remove pricing from a website, that means the pricing is a lot higher than the competition's, or the price is just so high that it often causes a sticker shock, or there's a lot of customization to pricing depending on each situation. So I'm not sure exactly how to interpret this as of right now. I'll take some time to think this through, but certainly I don't think that's a negative. Or maybe Tesla is just updating that website. So leave a comment below if you can find the order button.
And then we're also expecting some vehicle growth for the year too. Only 400,000 delivered in Q4, with expectations to average 450 to 500,000 a quarter for 2023. And with Tesla's operating leverage, all that additional gross profit goes straight into operating profit. So with PE ratios of 60 or even 50, Tesla can grow into a $1 trillion valuation. On the other hand, this bull run could keep going without Tesla even disclosing any more earnings, implying Tesla's PE ratio could keep increasing too over this time. No one can predict what may happen because no one can predict the madness of crowds or insanity of people. Many intelligent people have been burnt badly in the stock market.
Look, I like Lee, so I hope he's not talking about himself. I think when he sold Tesla stock, he still made money, but he got quite pessimistic there for a moment.
Underestimating what markets are truly capable of. There really is nothing more random or unpredictable than the stock market. Isaac Newton said he could calculate the motions of the heavenly bodies, but not the madness of people.
Very true. That's a good point. That's why I was so excited that day when Tesla stock dropped over 10% in one day down to $109. That was reasonable because people were panicking, but it was not logical. It did not make rational sense. There was a reason behind it, but the reason was very flawed, and that's why I was excited. Too bad it did not last that long.
We do not know what may happen in the stock price. Tesla could very well go back to all-time highs. It could even go to $1,000 on this run. The run might last until sometime in 2024. We don't know. But as the former Citigroup CEO Charles Prince said, as long as the music is playing, you've got to get up and dance. And it sounds like the music is still playing.
I have to confess, I am not much of a dancer. So then the Tesla Economist on December 28th said that the music has stopped playing. I guess I still kept dancing because, I'm not very good. So when the music is playing, I look ridiculous. And when the music is not playing and I dance, I still look ridiculous. So it's all the same, right? I do feel bad for him though. But he did say, hope I am wrong. So he did get, I guess, what he wanted.
If Tesla eventually reached 500,000 Cybertrucks a year, then we might expect another $10 billion in gross profits, around $20,000 profit per unit. Yes, perhaps potentially more than that. And then maybe $100,000 to $150,000 profit per semi-truck, including subsidies and tax credits. In other words, these two vehicles could potentially almost double earnings again. But the market is forward-looking. It can see this potential is on the way, and it will be priced in fairly early. And sure, it could take until 2025 until Cybertruck is at 500,000 a year run rate. And it might take until 2025 until the Giga Nevada extension is complete. But we will be seeing the progress along the whole way, including 4680 ramping and energy density improvements. We do, of course, have Investor Day coming up as well. And if everyone is already feeling bullish about that, then this may very well ride that same tide. Sure, historically we usually see a run-up before these events, and then a sell-off after, or people simply don't believe what Elon has said, like robotaxis or the Cybertruck. But Master Plan Part 3 might be different. Even if there is a minor sell-off afterwards, it just feels like Tesla wants to run and is looking for any excuse it can to return back to $1 trillion company.
When I invest for myself, one thing that I always do is never invest based on anything that I actually feel. I might feel that Tesla stock is going to drop or rise or explode. Does not matter. I'm looking at what I'm thinking, not what I'm feeling. I do respect Lee, though, for admitting that he is an emotional investor. It is much easier to not make mistakes if you know what your weaknesses are. So be careful. Don't make decisions based on what you feel when it comes to investments. Make decisions based on what you think. And this is the Tesla stock buying opportunity explained by Elon Musk. My name is Matt Post. Just like and subscribe if you haven't yet, and I will see you in the next video. Thank you so much for watching.